Let's face it, the market is broken, but to clarify, it was broken a long time ago. What we are seeing today in some ways has escalated beyond what we saw in 2000, beyond the subprime nonsense. This is simply speculation to the highest degree possible. Even the remnants of Blockbuster are now soaring. You can't make this stuff up, but here we are. You came here for the truth, so let me unveil that for you. Today we are going to talk about what's going on in the markets. Is it free money? Or is it a huge trap? We are going to look at all the details you need to know. I'm not going to rant on and get into exactly what's been happening here. You've seen GameStop, you've seen BlackBerry, you've seen Nokia, you've seen AMC, and all these other stocks rise higher and higher. And I'm going to just quickly go through exactly what's going on, give you the details you need to know on the inside. Let's begin. GameStop mania reveals power shift on Wall Street, and the pros are reeling. Internet-fueled amateurs on platforms like Reddit and Discord are piling into stocks, bragging about gains and banding together to intensify moves. I want to interject something right here. Remember what's actually happening on a deeper level. You have retail traders that are using accounts like Robinhood, free trading accounts. Their trades are being front-run by companies like Citadel that actually use the high frequency trading, and their computer algorithms are able to see what they're going to buy. They get in front running these trades and are able to profit off of all of this. So they are the ones that are supercharging, not necessarily somebody on an internet forum, but that's the leading the charge for sure. This is what's happening right now. It is very, very short term. As you can see, we will note how long this goes on for. This article here points out exactly what they're doing. It's simple, though not necessarily intuitive. Identify a company with huge levels of short interest and pile in. That's why companies like GameStop, which entered the week with 139% of its available shares, borrowed and sold short. This tells you what's been happening here. As you can see, many different companies are in this position, actually greater than 100%. And so companies are getting this interest now, which somehow, even though their actual company hasn't produced anything new, there's nothing coming down the pike, they don't have any developments out there. In fact, it looks weaker than it did, let's say, a couple of years ago or last year, like AMC, for instance, and yet the stock is going crazy. It's got something else to do with the whole situation, not the fundamentals, not the statistical fundamentals, and not actually what's going on with these corporations. This, to me, is completely crazy, but here we are. Wall Street's own populist revolt. You can see what has happened here to GameStop's market value. It hit at $1.10 billion by the time you're watching this video. It might be higher, it might be lower, we'll see. But essentially, they break down exactly what's going on here. A popular rebellion organized by the powerless against the powerful. It might have failed in Washington, but it certainly seems to be working on Wall Street, driving the news. The market value of GameStop is $10 billion on Tuesday's trading session, on a record volume of more than $26 billion. So looking at this period of time in which the stock was going nowhere, and then within a matter of a couple days, it skyrocketed. How it works: thanks to Robinhood and other stock trading apps, trading options in GameStop or BlackBerry, Bed Bath & Beyond, and any other smallish company Wall Street traders have bet against. It's easy, fun, and carries an irresistible commission of exactly $0. Giant hedge funds like Melvin Capital now find themselves at the mercy of thousands of small investors using the internet to coordinate their buying attacks. This has been happening right now, affecting many different hedge funds. They say they're attacking the hedge funds, but let's be honest. That's not what this is about. This is something very different. The bottom line, short selling, betting that a company's stock is going to fall, is a crucial element of efficient markets, but thanks to Reddit, it has also never been more dangerous. Right now, as I've shown you statistically, I might have a chart pulled up on this. The short interest has been going further and further and further down. There's basically nobody out there shorting at this point, and it's all call options. It's not stock put options that are happening today. That is statistically a fact, but this is something else altogether. Reddit fuel traders trigger volatility halts across the market. This is showing you AMC, and there has been periods of time in which on the 27th at least the market is getting halted out there. You could see others, same sort of situation right now because the stock is going too high, it's going too low, and there's all this movement and the actual companies involved. Now we got the SEC involved. Now we got others out there that are looking into the situation. I'll show you multiple levels of this right now, but it's silly because, if you look at certain stocks, when the market is going down, they halt the trading. When the market is going up like crazy, they'll let it happen in certain cases. Why is it that they allow it in one direction sometimes and another direction, maybe it sets off a trigger? Strange as far as I'm concerned, but anyway, that's speculation on my part, so I don't know what to say about it, but I just note it and you do what you want with it. So it looks like there has been some, let's call it censorship around this issue right now, because if you look at what happened with the Reddit group that drove GameStop shares 1,700% higher, and what happened here was that they made it private, but then it came back up. It looks like it was more of a glitch or something that they mentioned, but regardless, it did come back up after a relatively short period of time. However, I noted this: Discord bans their server for quote unquote hate speech in the wake of the SEC and the White House monitoring. So this is what they're saying that has happened. We'll see if that changes in the coming days. Maybe by the time you've watched this video, that has already changed. But right here, they're suggesting, no, you can't do what you're doing. This, on the other hand, really puts a big question in front of me right now, because it seems like it's really, really selective in what they're deciding to, let's say, enforce or not. I thought it was a joke. I really had to read into this to figure it out, but apparently this is real. The penny stock behind Blockbuster surges 1,400%. Rise from the dead or mistaken identity. This is, you remember Blockbuster? And I think I was just joking about it a day or two ago, telling you, hey, let's buy into Blockbuster. Well, apparently what's going on now is that we've got Blockbuster being bought up because of GameStop, because of AMC. They're looking at that and thinking, why can't we do the same for Blockbuster? Now, this particular stock is basically the remnants, I believe they discuss it here, the remaining piece of Blockbuster. And that basically they're going the whole bankruptcy process and so on. What's left is this penny stock, and it went up like absolute crazy rise in such a short period. Of course, the volume is really, really low. So this is just showing you that anything could be bought up, sending just through the sky at this point. And what is the fundamental reason for it? None whatsoever. So what happens to these eventually? The expectation is that these will crash and burn back to where they were, perhaps even worse than where they were before. But are some people going to make out like bandits? We'll see. Melvin Capital hedge fund targeted by Reddit board closes out of GameStop short position. So we're seeing these different companies that had short positions on companies like GameStop getting simply pushed out of this, and they have been forced to cover their losses, do whatever they can, and it's not looking good for these particular hedge funds in this case here. But as I said, the amount of shorts are so small in comparison to the total out there that I think there's a little bit of a mistake as to what the actual problems of the financial system, the stock market, and so on are right now. Out of CNBC, I do think we are at a speculative peak. We don't know, but this could be that event, that seminal event that triggers some downward motion. I don't know. Personally, for myself, there's a lot going on here, and I just don't know what will actually be the trigger. This could be an event like 2000. It could be something else that happens along the way. But all we need is a trigger, and that sets the whole thing off. You remember subprime crisis unraveling into a global financial crisis. All the problems were back in 2007 into 2008 was a subprime crisis, and it was only affecting a very small group of mortgage securities. You didn't have to worry about it. But then by the time we got to 2009, it was all hell breaking loose, right? So we don't know what's going on underneath it because the financial system, quite frankly, stinks. All right, let's look at some charts. Come on, GPS, you haven't shown me a chart in 5 minutes. Let's do it. Most shorted stocks. This right here gives you an indication of what's been happening in this time. Yes, throughout 2020, basically since March 2020 up until this point, it's been rising. But right now, 2021, it's gone up straight up. A few days ago, I had told you what's been happening here, and I'm covering it again, covering it multiple times here, basically every day now. I told you specifically that the trade right now is to look at the most shorted stocks, buy those stocks, and they are rising. I did not tell you this as financial advice. Obviously, I'm not doing that, but I'm saying that's what traders are doing. That would have tripled your money in this short period of time. That's how wacky things are today. Then you go on the opposite end of the spectrum, hedge fund VIP stock basket throughout this period looking very, very terrible. And it's just trying to give you some, an indication of what's been happening as we have seen certainly the tech stocks rising. You look at what's happening on the other hand with these hedge funds. Some of them have performed very poorly. Like I said, the market right now is not seeing many shorts at all. In fact, SPY sees short interest dwindle as US stocks rally. The top area there, the white chart, that line is the market short interest as a percentage of the shares out. It's hard to determine that exactly, but based on this, you're looking at maybe 2%. 2%, all right? Back in 2011, that was around 20%, just to give you a comparison. And the bottom there, we're looking at the S&P. And obviously, throughout this period, it's been going higher and higher and higher. There are many reasons for this, but certainly, I just wanted to make it clear that it's not as if there's a whole bunch of these investors out there shorting the market and they're profiting off it and so on. Right now, that's a losing game. It's been a losing game for a while. Leverage is certainly rising. That's one thing that's in addition to the, you look at the stocks, you look at the balance sheets, you look at the amount of money in circulation. My goodness, lever up. Goldman's hedge fund clients raise leverage by the most in 3 years. And why? Because you can't lose. Apparently, you cannot lose in this market. There's nothing that can be done in order to make the market go down, so they say. So they're just leveraging up. Just like margin. In this case here, you are looking at the FINRA margin debt and the S&P 500 real growth since 1997. The red line there, of course, that's margin debt growth. And you could see how it has accelerated since March 2020 far faster, and that's obvious, far faster than what we have seen with the growth of the actual market, which has really accelerated throughout this period. But if you want to get it hot and heavy, you got to put the pedal to the metal, and that's what people are doing. They're leveraging up, they're using margin. Call option volume has absolutely skyrocketed today. There are all kinds of courses on options today taught to you by a 16-year-old who just learned about it in the last half an hour. Well, right now, look at this. 2000, the chart starts at, and it over time essentially has risen, but just in the last year, this has gone completely into new territory, and it doesn't look like, at least at this point, that's stopping anytime soon. NASDAQ volume as well has risen dramatically. Nasdaq CEO suggests halt to trading to allow big investors to recalibrate their positions to combat Reddit users. Wait a second. Seems like they're a little worried about what's happening here. Take a look at this. I think that in general, when we evaluate how we would manage through a situation where you see a significant run up in stock, not based on news, not based on fundamentals, what we do is we have technology that evaluates social media chatter. If we see a significant rise in the chatter on social media channels, we also match that up against unusual trading activity, potentially halt the stock to allow ourselves to investigate the situation. I love that one. Investigate the situation to be able to engage with the company and to give investors a chance to recalibrate their positions. So what exactly are they doing? If they want to group together and pummel a stock in this way, why shouldn't they be able to do that? You have it going in the opposite direction where the Federal Reserve is juicing up the market. You've got central banks out there that are literally buying shares of these companies. I mean, my goodness, the Federal Reserve is doing it through the ETFs that they've used all throughout this period of time through their friends, BlackRock and all the others that have been buying into different things. That is obviously going to be beneficial for these companies, sending them rocketing higher than the other investors climb on, like little fish on the big fish. This is a whole process that's been taking place on the way up, but that's okay because it's BlackRock, it's Vanguard, it's, you're talking about the Apples and the Amazons and all these companies. Oh, but suddenly when it works in the other direction, they're going to make sure that they investigate the situation. There's so much fraud and rot in this system, and now they're starting to investigate? I think not. I think this is simply protecting friends in high places. Don't worry, because the SEC is monitoring GameStop frenzy as Warren pressures regulators. You know what? They're fantastic, the SEC. I mean, they were definitely there in 2007, making sure that they were monitoring the situation, making sure it was all good. So I think that we should be totally fine and everything will be unicorns and rainbows from here on out. And then I want to end with this. Yes, GameStop is a content moderation issue for Reddit. The same tools that can be used to build mass movements can be used by bad actors to manipulate the masses later on. Consider Reddit warned. All I'm saying right here is that what if they start shutting things like this down? They make it more and more difficult for people to communicate based on this. Look, there is free speech supposed to be allowed. If they want to do this, they should be allowed to do this. And that's simply the game. That's where I get tough on it. I don't like this type of business. I don't like when stocks are going up 1,600% when you got Blockbuster and this madness that they're seeing. But at the same time, they should be definitely free to do so if they so desire. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. Thank you very much. If you want to learn about e-commerce, you want to sell stuff online, you can do so for free at the AmazonGPS.com. If you want to learn about the financial system, top to bottom, A to Z, I've got everything you need to know in these two books. Check it out at the link in the description. And if you haven't seen this, you definitely want to take a look. Click it. I'll see you there.